Hello everyone, welcome to the market outlook for the week. Gaurang Shah here from Geojit Financial Services, and I speak to all of you all this Monday morning at around about 10:15. Markets have corrected a little bit on the downside, just like what we saw last week on Friday. Consolidation is going to be the order of the day, and if you recollect, last week we had given out a broad range on the Nifty spot. 23,300 and 23,400 on the lower side, 23,700 and 24,000 on the higher side. Remember one thing, friends, this is going to be F1 expiry week, so expect a little bit of choppiness and volatility. Before I go any further, let me give you certain levels on various Sensex, Nifty, Bank Nifty, Rupee Dollar equation, and crude oil. So as I speak to you, Sensex is down about 155 points, 77,050. 77,050 is the level on Sensex. Nifty is down about 60 odd points, 23,440 is the level on Nifty. Bank Nifty is down about 330 points, 51,330 is the level on Bank Nifty. A slight bit of strength, 0.007 paise on the rupee against the dollar, and the level is 83.52 rupees to a dollar. Little bit of weakness on the crude oil front, but not very comfortable zones. Brent is trading at about $85.18 to a barrel, and NYMEX is trading at about $80.65 to a barrel. The news flows from the Middle East has given a little bit of bump up last week, and the crude oil stays elevated because the uncertainty as far as the Middle East situation is concerned still persists, and any kind of development over there will have its impact on the crude oil front depending upon which side the news flows is. If there is any positive news, we might see a little bit of cool off in crude oil, in which case you could see levels of 83 and 84 on Brent and 78 and thereabouts as far as NYMEX is concerned. On the rupee dollar equation, we have seen 83.50 levels even last week, and then we've seen some strength in the rupee and settling at about 83.30. That's going to be the broad range on the strength 83.30 and on the weakness 83.50, 83.60 on the rupee against the dollar. Now coming to the markets, friends. So the range for given out last week, we are maintaining the same range, and I think you are going to see a little bit of buying coming in at lower level. Presently, where we are trading at 23,400 plus levels, a little bit of selling pressure can be seen getting elevated as we approach the F1 expiry week, F1 expiry day, I beg your pardon, and then of course a little bit of rollovers and buying activity somewhere around these levels. Today is going to be the first day of the parliament session also, which will also be in the spotlight. Of course, depending which way the progress is done over there, but it's going to be very choppy and noisy. Being the first day of the parliament, I think both sides will have their own case to put forward to. On the F1 expiry, given the rollovers that we had seen last week, we expect same kind of rollovers and a little bit of stability, possibly on second half of trading session on Thursday and maybe on Friday, and then a little bit more stability coming in first week of July when we begin our new week of trading. Remember one thing, we'll also see the curtain raiser for the first quarter earnings this financial year, new financial year FY25 from 10th of July or thereabouts, and then we'll possibly look how the earnings season is going to span out. Overall, friends, our sense is that this could be a very decisive week in terms of consolidation. We have seen a little bit of cool off as far as FI selling pressure is concerned. And on the flip side, we've seen some value buying coming in from domestic institutional investors. There is positivity in terms of data flows, and of course, two important factors that will dominate the markets across the globe is going to be new developed markets data points, and what is going to be the situation as far as the Middle East situation is concerned. Monsoon has been a little bit on the weaker side on three regions. South India has seen a little bit better monsoon, but West, East and North India has seen deficit. Deficit is there in Bihar, in Punjab, including Uttar Pradesh. There has been a little bit of deficit, but the Met Department has given out a statement that since this is the beginning of the monsoon, the deficit is not as alarming as it would possibly cause some concern in terms of production of agri products. Expectation is that possibly this week and the week starting July, first week onwards, we should see a little bit of catch up, and that could possibly settle down the sentiments. And deficit monsoon, friends, has its own impact on consumption driven stocks, especially the FMCG discretionary spend, cement, etc., etc. So that's what we are witnessing in the market right now. Other than any kind of developments on the global arena, domestically, there are no major triggers that could impact the market. The only thing that we'll have to watch out for is the sell side figures from the FIs, and of course, like I mentioned in my opening remarks, F&O expiry week will also be something that will dominate the market in terms of choppiness and volatility. Every time, and of course, the range remains intact. 23,300, 23,400 is where you might see a little bit of buying coming in, value buying in from a long-term point of view. And 27,000, 23,700 and 24,000 is the level wherein you will see a little bit of top heavy filling. Provided, of course, data points are supportive and the F&O rollovers don't create a little bit of panic as and when we approach the expiry day, that is this week on Thursday. We always give you two investment ideas, friends, from a long-term point of view on the fundamental side. Today as well, we've got two investment ideas on the fundamental side. The first one is from the insurance, life insurance sector, and the name of the company is SBI Life. The GST Council meet and the proposal to do certain changes in certain categories will possibly help the sentiments over here. And even if you look at the run rate as far as the new premium are concerned, has been more stable right from last financial year, third quarter and fourth quarter. We expect the first quarter this new financial year to be equally robust in terms of new premium collection, and hence a fundamental investment idea in form of SBI Life Insurance. Targets could be in excess of 1,600. These are preliminary targets. If the earnings are going to be better than what we estimate, then naturally these targets would get revised appropriately depending which side the earnings is going to go. The second one is from a healthcare related sector, a company which is not really much spoken about but has been a good performer on the earnings delivery, and the name of the company is Narayan Rudalaya. Primarily into healthcare and providing healthcare services to the more needy section of the population, and of course doing its own best in terms of corporate social responsibility. And in this kind of a market, friends, I think there would be more interest shifted towards pharma, healthcare, IT, etc., given the sideways movements on the market. And in this kind of a scenario, we believe that the earnings that were delivered by Narayan Rudalaya and the expectation of better earnings, we could see levels of somewhere close to about 1,460 on Narayan Rudal. This again are preliminary targets. In case if the earnings are better than what we expect, then these targets would get revised appropriately depending upon which way the earnings are going to get delivered. But definitely a promising investment from a long-term point of view. I will again repeat two investment ideas. First one is SBI Life with a target of 1,600 plus, and Narayan Rudalaya with a target of 1,460. Mind you, friends, these are long-term investment ideas. These are not short-term BTST or medium term, but fundamentally long-term investment ideas. Start from current levels. Don't put your money at one time. And as and when the market gives you opportunity on the lower side, I think it will be a great opportunity to add on to these stocks at lower levels. Thank you very much for your patience hearing, and I'll see you again next week. Till then, please do take care of yourself. Bye-bye.